Columbia Alumni Radio. I'm here with Marco Zappacosta, Columbia College '07, I believe,
That's
and
right.
founder of a company called Thumbtack. Marco, welcome to the show.
We met.
So Marco, tell us for those of us who don't know what Thumbtack is and what it's about, and why you guys exist. What's the pitch? What are you doing, and why should we care?
Yeah. So we're a matchmaker. We help customers find and hire local service professionals like plumbers, caterers, tutors. These are things that everybody needs in their day-to-day lives. But the truth is, historically, it's been a huge pain in the ass to actually go out and find the right person for the job you need done. And so what we've created is a new way of hiring. Instead of the customer having to do the work and calling and emailing to try and figure out which pros are available and interested, instead you just tell us once, you fill out a form detailing the project you're trying to get done, we send that out to our network of vetted pros, and then the ones who are interested and qualified to do your job get introduced directly back to you with quotes, with reviews, profiles, everything you need to make a confident hiring decision. So we get you to done much faster than really any other way of hiring a local pro.
And so that sounds great. Why does that matter? Like, what's important to that about that? Like, who do you serve? Like, what change do you guys make in the world because you exist now?
Yeah, so as a marketplace, we serve both. And on the customer end, we're serving busy moms, busy homeowners, busy professionals, folks who want to accomplish things in their lives, be it, adding a fresh coat of paint to the outside of their house, helping their kid get tutored in math, maybe struggling, or planning a big 40th birthday party that they want to feel very special. And these are all things that people want and need and are invested in. It's not a casual sort of frivolous activity. You're spending real money, and it's often the things you care most about: your wellness, your children, your home. And so we help you get what you want more effectively than any other way. And through that, for these professionals, what we're doing is helping them grow their business. There's roughly 20 million local service professionals in the United States who make their living every single day by offering their trade to their customers. And historically, they've really struggled to market themselves, to find new customers, and to grow their business, because that's a skill set that's honestly orthogonal to being a good tradesman or woman, right? Being a good contractor or a good caterer is completely unrelated to being a good online marketer. And so what we've done is, by empowering them with the platform that we've built, we help them connect with customers more easily, grow their business, and achieve their goals. And that feels good.
And can you walk me through what's an example of a use case? Like, what's a common thing or a recent use case that someone who would find your product, and what would they use it for?
Yeah, so we're having a party at our apartment. My wife and I turned 30, and we wanted to have a bartender in the backyard. 30th birthdays, kind of gussy it up a little bit. And so we put a request out on Thumbtack and got 4 quotes within the hour from bartenders who offered us sort of various options. So, one guy saying he could do sort of 2 specialty cocktails for this amount of money, another guy who just sort of hosts an open bar, another one who, liked to savor champagne bottles and sort of make a whole thing of it. And we very quickly found the right guy for us and hired him. And, with, call it, honestly, like 10 minutes of work on our end, maybe even less, we were able to find exactly the right person who could come over when we needed for a price we were willing to pay. And we achieved what we wanted, which was a special sort of afternoon.
That's awesome. So how big is this company? You're turning 30, that, sounds like this weekend, or soon. What scale are you guys at? How do you guys think? You mentioned that there's 20 million people, 20 million professionals,
Yep.
that it's in your market. How many of those are you guys actually working with today?
So there are now 200,000 active paying professionals on Thumbtack. And that's a huge number, right? It's 1% of all service professionals in the country who are now using our platform on an ongoing basis. And it's actually more paying businesses than Yelp or Angie's List have combined. And the reason we've been able to engage such a large audience of professionals is because we're driving them a ton of business. So on a yearly basis, at this point, we're sending them $1 billion worth of business. So that's money we're putting in the pockets of these business owners through customers that they found on Thumbtack. And that's a meaningful difference for them, and that's why we've been able to sort of attract and retain so many professionals around the country.
And how big, and so you guys have 200,000 of these professionals on the platform. Are you guys in the Bay Area? Are you guys, how many people are in the company? Have you guys raised money? Talk a little bit about that.
Yeah, so we're live nationwide. To put that number in context, the $1 billion of commerce that we now facilitate is on the order of 0.1% of the overall market. There are $700 billion a year spent on local services. So we're just getting started. And the company today is about 370 people here in the United States. We have an office of 130 in San Francisco where we design, engineer product, and then we have a support center in Salt Lake City where we've got 240 folks who help out on the phone when our pros or customers have questions and need some help. And to fund all that, we've raised $150 million to date and are sort of growing very strongly. So it's good. It's fun.
Congrats, man. That's some big numbers. That's really impressive. And so how'd you get here? You graduated less than 10 years ago. You're running this company. Sounds like a pretty big company. What's the story behind that?
So, I met my co-founders in college. They didn't go to Columbia, but we met when we worked on a student advocacy group together and sort of took some time off from college to do that. And it was, despite being sort of a nonprofit and sort of politically oriented, it was still a startup. And building something out of nothing, rallying people around a shared dream was just super fun and motivating and exciting. And so we decided to do it again. And we just started thinking about what was the biggest problem we could solve with technology. And as we started sort of talking about that and sort of thinking on what we could work on, what we realized was that the local services sector was incredibly old and antiquated. People were still using bulletin boards or sort of business cards posted on sort of telephone poles to find customers or to find a professional. And that made no sense. And so we started thinking about how we might be able to improve upon that. And 6 years later, this is what we came up with.
And were you an engineer? Like, how did you go? You mentioned political advocacy. Why? I mean, now it's all the I feel like now it's all the rage to be starting internet companies. But I know when I was at Columbia, that felt like everything was dominated by finance, or maybe consulting. How did that happen? Like, what was the mental shift that happened there?
So I guess I was fortunate in some regard to grow up in Silicon Valley. I grew up in Menlo Park, which is sort of right near Stanford and Palo Alto, and I saw this. So it wasn't something that was distant and sort of like weird for me. I grew up in an area where this was super common, and so after that experience working with my co-founders, we just had so much fun that we wanted to do it again. And I think, with my sort of perspective, sort of highlighted that, hey, we should build a technology company. That's the most scalable way to have a big impact and to really do something big and meaningful. And we were four of us. One was technical, the other one of us sort of were just hustlers. And to build a marketplace, there's a lot you need to do beyond simply building the product. You need to learn how to attract customers, how to attract professionals, understand what their needs are, and really develop the right product. So that's what we ended up focusing our time on. And it's something that we've had to just learn a lot along the way because we didn't know how to do any of this. And it's just a constant exercise of digging in and learning and trying and failing and trying to get there.
So I remember when, so we had a class at Columbia together. Yes, you and me, we had Intro to International Relations. We had that with Kim Martin.
Yeah.
And we had that discussion section. And I think we'd sit next to each other and kind of just crack jokes or something. And then I moved out here. Maybe I was in New York. I don't know, but it was like 2010. And I'm watching This Week in Startups, and I see, Marco Zappacosta, from Thumbtack. I'm like, dude, I know that guy. I sat next to that guy. And it was just sort of like, small world. What's, you guys now raised 158 million. Was that the number you just put out there? $1 million. Yeah, from from investors like Google, Sequoia Capital, Tiger Global, so some big names. And it sounds like you guys are chugging along quite nicely. But I know from us talking previously that it kind of wasn't always that way, and that you guys had some existential oh shit moments as you were building your business. You want to tell us a little about some of those?
Sure. So yeah, I mean, we've gotten very far and we're proud of that, but it certainly was not sort of a straight line from nothing to where we are today. There are a lot of sort of twists and turns and stops and starts. And I think the time we came closest to dying was in raising our Series A, our first institutional sort of investment round. And the truth is, like, we didn't really understand what was necessary to get that done. We'd raised our angel round about a year prior, and the feedback from these angels, who were all smart and accomplished in their own right, was to focus on solving the chicken and the egg problem, the sort of marketplace liquidity problem of attracting both buyers and sellers and getting that flywheel spinning. And I think they were absolutely right in that regard. It just wasn't completely right. And so what we did not focus on, which in retrospect we should have, was monetization efforts. Our view was that the hard part of building this business was most of all in attracting customers and professionals scalably. And that was true, but another sort of challenge was, how do you monetize that? And we went into the fundraising.
And so you guys were, just so I'm clear.
Yeah.
So you guys were giving the service away for free, saying, hey, look, we did this thing. We're connecting people. Isn't that awesome? And your initial investors, these angel investors who wrote you maybe some personal checks, were excited about that. And then you went sort of to the big leagues, to some of these Silicon Valley venture capital firms, and you got some different feedback. Is that just so I'm clear for
yeah, that's exactly right. Everyone was like, okay, awesome that what you've done on the acquisition side in terms of being able to attract customers and professionals, but how are you going to make money? We basically assumed that they would believe that we could do that. And it turns out there's not actually much venture in venture capital. They want to see you sort of having everything proved out before they put their money in. And that was tough. And so we had to scramble. So here we were, sort of August 2011, getting this feedback saying, nice job, congrats, but we haven't seen enough here to believe that you're going to be able to make money. And so we had to scramble, and we thankfully over the next couple months put in place an example of how we could make money. It's actually not the way we monetize today. Proved to the investors who ultimately came in and others that it was certainly possible. And that was a tough time because we almost ran out of money, and so that imposes a lot of stress on the business, on the team, on the relationships that you have, and it's generally just shitty.
And when you say you almost ran out of money, it was my impression you guys actually did run out of money, or that there was some time where you and most of the staff were not taking a salary. Is
which is
that
different. That is accurate, but it's different than running out of money. So, basically, startups die when people give up, not necessarily when you run out of money. I believe that at the end, sort of 7 out of 8 were not drawing salary. They were still sort of getting equity, and they got a bunch of equity to compensate them for the fact that they weren't getting paid any cash. But we believed, and finally, sort of come November, signed that term sheet, and at that point, we said, okay, we know we'll make it. Now we just have to bridge this sort of last month before the money comes in. And so, yeah, it was not that fun, but I think really important for us as a team and ultimately the DNA of the company. And I think we've carried that with us.
So just so I'm clear here. So if you so what costs are there if no one's, I mean, I guess, is this like you got to like $100 in the bank account and then just stop paying yourselves and then like, hey, we're not out of money yet? Is that how that works specifically?
I don't think we ever got quite that low. But basically we knew what we had in the bank, and you got to manage your burn. And the biggest source of expenses for most startups is headcount. You cut that out, you can go a long time, right? Servers don't cost that much. Rent at the end of the day is not that much. You don't have to buy new equipment if you're not hiring new people. So you can get the burn sort of radically low if truly you need to. It's not like a enjoyable experience, but it worked.
Okay, so you guys go try to raise money, and how many firms did you talk to? What was your thinking going into it in terms of like, so I remember that you guys had raised money from some sort of hot shit investors, from like some celebrity folks, and you guys are kind of a hot company. And if I remember, you told me that you had pitched 52 venture capital firms that told you no.
It's more like 45, but same game.
So you pitched 45 VC firms. They turned you down.
Well, we got 2 yeses.
Oh, okay. Talk to me about that.
They're the last 2. It's not like we got the first 2 people to say yes and decided to talk to 43 more just for fun. And part of it was upfront learning the lesson of the monetization and how important that was going to be to get this done. And so going through a bunch of those folks, hearing no, and then sort of pulling back, retooling the effort, getting that subscription model in place, making some money, and then going back out, and very quickly got some yeses, which is great, because it turned out that the thing we were hearing as the reason people weren't interested was not only fixable, but was the only thing standing in the way of getting a yes.
So
you don't always know, right? I mean, you pitch these VCs, you'll hear all sorts of reasons why they're not interested. And it's hard to know if they're just trying to get you out of the room nicely or if they're actually giving you, actionable feedback.
Yeah. And so how did that make you feel? I mean, going through that process and hearing that's 45 no's is a lot of no's. I know a lot of people would be tempted to quit, after, I don't know, maybe 30.
So it was immensely frustrating and trying. So I think the frustrating part was, we were sure, and in hindsight, we have been proved that it was inevitable that this problem would be fixed. And it was very frustrating. Some of these folks, it wasn't that they didn't believe in us, they didn't even believe in this opportunity. And something that we saw as inevitable and they saw as sort of non-existent was a very, very frustrating sort of set of conversations. And then it's trying because you have to question yourself, because you realize you believe this thing's inevitable, but you keep hearing no. And so I think the obvious takeaway becomes like, well, maybe I'm not the guy, or we're not the team to be able to pull this off. And you absolutely question yourself. I think at the end of the day, we are just very stubborn and hate losing a lot. immensely, and so we're just sort of unwilling to give up. Now, there would have been a point, right? The money would have actually run out, and people, you can get away with not paying them for a couple months, but not a couple years. So there was certainly a reckoning day if this didn't happen at some point, but we got it done. We were stronger for it, and sort of it really sort of forged the DNA of the company.
And so, how much money did you actually end up with when on number 47 there?
We raised 4.5 in that round. It was our Series A. Raised 4.5, and
4.5 million for those not used to the numbers.
That's right. That's right. That's the shorthand. And basically, what we said to ourselves was, okay, now it's time. Now we have the time and money to really fix the business model, to get that right and step on the gas. And so we spent sort of the better part of a year testing a bunch of different models. Tested a commission model where pros would pay us a fraction of the revenue we sent them. Sort of tested out that subscription model where they paid a fixed fee per month, and then tested a introduction-based model, which we still have today and to be very successful, whereby we charge professionals to get introduced to customers of their choosing. So they're able to read what the customer wants to get done, the what, the when, the where, and if they want to send a quote and get introduced to this customer, they pay Thumbtack a fixed fee for doing so. And they love it because they have total discretion. There's no pre-commitment. There's no minimum monthly payments. They simply pay to respond to the customers that they think they can serve well. And that's great for the customer too, because it actually means that all the responses you're getting are qualified. It's not somebody just sort of spraying and praying that you hire them. It's somebody who said, oh, wow, I can serve this guy well, I can win this job, and let me put my best foot forward. And so the sort of holy grail is when you have a business model that doesn't just make money, which is actually not that hard, it actually makes the experience better. And that's what our introduction-based model let us do.
And so how much does a pro pay? If I'm a painter, how much do I pay to get introduced to somebody?
So it costs between $3 and $18, depending on the category. So the lower dollar jobs, you can imagine sort of fixing a leaky faucet, something like that, towards $3. And then if you're a contractor to sort of build a fence or refinish some cabinets, sort of $18. It reflects the size of the job.
Got it. So, okay. So at that point, so you guys are sort of struggling. You got some clear feedback saying, hey guys, problem on your business model. Great that you were able to get a bunch of people to use your free thing. Mm-hmm. You finally got an investor to write you a check. And I think for most people in most parts of the world, $4.5 million is actually an incredibly large amount of money. But for your company, it sounds like that was a relatively modest amount of capital to take in. Where did the other $154 million happen? How did that happen?
Yeah, so we started in 2009, and our sort of seed round, our angel round in that Series A raised $6 million. And so from 2009 through March of 2013, so almost 4 years, 3.5 years, we were running off this $6 million. And we actually had a bunch of money left in the bank at that point. So we were very sort of cost conscious and lean. What happens in these tech companies, though, is that once it really hits, once the model starts working, awareness starts going up, your numbers start to pick up, there's an incredible interest among investors to participate. And because once it's all pointing up and to the right, then people get excited about it. And so with the traction that started happening and the trajectory that we started to sort of get on, we were able to very quickly attract a lot of investment. So from December, 2009 to March of 13, raised $6 million. In the 15 months after that, from sort of May of 13 through August of last year, we raised $144 million. And it's because the business just took off. There was a clear opportunity to continue to invest in both our growth and our product. And people believed what we'd always believed, that this thing was going to be huge, that this was a big problem that hundreds of millions of people have in the United States and all around the world. And we've built the best solution for them. And so that's what made it happen. It's kind of this weird sort of on-off switch. And it's interesting. I think people, they see these big numbers and they think, oh, it must be very easy to raise that kind of money. The truth is it's very binary. It's basically either impossible for you to raise a ton of money or shockingly easy. And there's very little in between. Because once the numbers look super strong and the business model is proven and you can do customer interviews and look at NPS scores and see how much people love it, then it's not you selling the business, it's the business selling itself. But if you don't have those numbers and you don't have this sort of spreadsheet that proves your case, it doesn't matter how good of a pitch man or woman you are, they're not going to believe you. And so it's a very binary market. I think that's something that's not always appreciated from the outside.
So there's a story that you've told me once that I'd just love to have you recount here, which is, you said you had tried out a bunch of different business models. So the way I remember is basically you raised the Series A. You said, "Oh, thank God. Okay, we got to figure this out, guys." And then you deployed like 5 different business models at once or something, and then one of them worked, and you took them to an investor. Tell that story. That's just a great one.
Yeah, so I mean, this goes back to the year after the Series A, 2012, where we knew what we had wasn't the right answer, but we didn't have much time to get to the right answer. And conceptually, there were a lot of different ways of doing it. And so the benefit of having a localized sort of product like we do is that you can test different things in different places and nobody will really notice. And so we started with a few sort of isolated places. So Atlanta became a test market because Atlanta as a city isn't close to other cities. And then Texas as a state was a great test market because there are no big cities that ring Texas. And so those are 2 examples, and there were a couple others, of places that were kind of segregated off, and we could then sort of change the business model. And so for the pros in Texas or for the pros in Atlanta, we could try something else out. And at our height, I think we had 5, maybe even 6 different versions of our business model. Customer support team was a total nightmare because they had to like keep track of who was in what and try to explain them the right set of things relative to that. But it allowed us to learn incredibly quickly and to move much faster than we otherwise could have. And I think it speaks to our approach where there are some things that you have to sort of be very sort of stubborn about and drive towards a specific vision around. And there are some things you just don't know and you have to learn. And the only way you learn is by testing. And so, this was one of those times where it was not obvious in the abstract which one of these models would be better. Pros and even talk about it, but until you put it in the wild and see what people will actually pay for, you just don't know.
And I think the story that you told me that I thought was kind of crazy, because I think, a lot of entrepreneurs out there, they imagine, you raise money from Sequoia Capital, which is, one of the, arguably the best venture capital firm in the history of like the technology industry. That basically you got some numbers and then some like 8 weeks later, you just walked in their office and then walked out with a check.
Yeah, so this I think is a huge testament to Sequoia and how they do business and how actually honest they are. So when we pitched them during the Series A, they, more than most, were very transparent of the fact that they loved the space, they believed in the product vision, they believed in us, but they did not believe that we had any credible answer to how we were going to make money. And they told us point blank, come back when you figure it out. And we said, all right, we'll do that. And so in now April of 2013, after 6 weeks of having fully rolled out this new model nationwide, went live March 1st, 2013, all around the country, we went to them and showed them the numbers, which were super strong. So I think they reacted positively because of the numbers, but also because of the process, how we actually went about solving that problem and how we presented the case, where we didn't know how to do something, we tested a bunch of stuff, we isolated the thing that worked well, and then implemented it, and the data held. And I think that convinced them that not only had we found the right solution, but this was a team that in the future could surmount other challenges just as effectively. And that's what they bet on. And a couple of weeks or 2-3 weeks after that, we'd signed a term sheet.
And they put, I think it was $8 million into the company. Is that correct?
12.5.
12.5. Oh, well, okay.
Yeah.
Nice.
Yeah.
So fast forward today, you guys are, on fire in a good way. It seems like, the train is chugging, quite nicely. And meanwhile, there's a lot of, this is August 27th, 2015. The stock market's been all over the place. I've been reading the New York Times, someone saying like, oh, maybe a downturn would be good for Silicon Valley. What's you're in the middle here, you're in the mix, you're neck deep here. What do you think the state of affairs is in the Valley? Is there some sort of bubble? Should people care about what's going on in China, the stock market stuff? Does it affect you? What's your perspective?
So, working backwards, it does affect us to some degree, right? If we ever wanted to raise again, as we get closer to being a public company, you start engaging with investors who are mutual funds or crossover investors who can invest in public companies and private companies. And when public markets are down, these guys take a look at things differently. So it certainly affects us by virtue of the capital markets. Now, that's pretty specific to us because we're far along in our life cycle. If you're an early stage company, I'd argue that the capital markets by and large don't have an effect on you. Thinking back on when we started 2 weeks before Lehman went under. And I remember that happening and sort of, looking over my co-founder and being like, well, fuck it. It's not like we got anything else we can do. So we might as well keep our heads down and just grind this out. And, I think that attitude is something that we've lost a little bit in this sort of heady time that we are in. And, I think popular culture has done a good service in that it has brought attention to sort of entrepreneurships and startups and the impact that they can have, and the incredible speed with which they can build sort of meaningful companies and sort of make their customers happy. Though I think we've probably gone a bit too far and glamorized it more than it should be, and made it seem like it's less risky than it really is. So I think, I don't wish us to sort of go through a bad period, but I do think it'd be helpful or healthy for people to, just be confronted with reality that, things don't always go up and to the right. Startups don't always get soft landings. It's not always easy to raise money. The struggle is just a fact of life. It's not because you're good or you're bad. It's just how this game goes. And I think you not have to face that. So I think as the tide goes out to some degree, I actually don't think it's a bubble at all. I do think that people have sort of forgotten how hard this stuff is. I think it'll be healthy. I think people will sort of retrench. I think some of the people who aren't as serious about it may exit or fold up, and we'll all be better off for it.
That's funny. I was, as you were talking about like this bubble, and I was just listening to you and thinking about it. You know, there's now that everyone has a supercomputer in their pocket tied to all the world's knowledge, that changed a lot of things. And when I think of why like why an abstract, I'm a big fan of Thumbtack. I've used it on several occasions now. But why in the abstract it works, I think it works, and why the timing is perfect is because of mobile, and all these Android, and everyone has a smartphone in their pocket. It's not just something for wealthy people. The plumber can have a smartphone, and I'm going to guess that that's how most of the pros that you have interact with with Thumbtack.
Yep.
And that's kind of a big shift. And that, I think that kind of changes the nature of the internet, the nature of like the sort of business opportunity here. That's my opinion. What do you think about that? How does smartphones change?
Oh, it's fundamental to Thumbtack existing. So I think there's been a couple of trends that have worked in our favor. And one trend is customers ever more start their searches online. Be it you're buying a toaster or hiring a plumber, ever more, you just start online. And smartphones is part of that, but I think it's actually just broader. It's how we get things done. With regard to smartphones, the reason why it's so fundamental for us is that to help answer the question for a customer of who can come to me, who's available to do this job at this time, we need to go ask these pros. It's not like we have perfect knowledge around the preference of a plumber. We have to go ask them and say, hey, Joe, hey, Jane, are you free 4 p.m. Tuesday to do this job in this zip code? Yes or no? And without the mobile phone in their pocket that we can email, text, and push notificate, it would be impossible to get them to answer that in a timely fashion such that we can get the customer what they want. So the smartphone, primarily for its penetration among the professionals who are out on the road plying their trade, is fundamental to our success. The third thing that I think has happened, which has been very helpful for us, is that I think there is a growing comfort with meeting strangers that the internet tells you to meet. So dating apps, right? 15, 20 years ago, you go tell somebody that you're going to go to a bar and meet someone that some algorithm suggests you would like because you swiped right on a picture and had a couple of text messages with them. I think most people would say you're crazy. And now it's like a non-issue. Many people meet their sort of loved ones and their sort of life partners online, and it's just normal. Ditto getting in the back seat of somebody's car and just having them drive you around the city. It's totally crazy. And yet now we don't even blink. And so the thought of hiring a plumber online, historically, I think people were a little reticent. They'd be like, oh my God, I'm using the internet to have somebody come to my home. But at this point, it's no different. You met your wife on the internet. You just got in a stranger's car to go on a date with her. Hiring a plumber to come over is not that weird. And all of those forces together have helped sort of precipitate our success.
Do you think that that same dynamic is responsible for, well, let me rephrase that. Personally, I think that dynamic is responsible for this massive explosion in technology that we're seeing today. That all these companies, that there's a lot of froth in this market, but there's a lot of world-changing opportunities. I mean, never before has this in human history have people been so connected. And as you said, our social norms are sort of catching up to to the technology, and there's always kind of been a lag there. what industries or what opportunities, like what service today that you want to exist doesn't exist yet that you think should exist?
So I think about it from a couple of different ways. So I think when you're talking about sort of commerce, many things that today are mediated by brokers will probably have a marketplace develop to facilitate these transactions. So middlemen generally serve an important purpose, but are, when they're actually humans, are a fairly inefficient way of doing it. I think the trucking industry is one that's going through this right now. So if you are a small business, needs to ship something, needs a semi to come pick up something to ship it to a customer, you call your broker. You probably have 2 or 3 shipping brokers, get quotes, and have somebody send you a truck. That is crazy because there are trucks driving by all the time, going from here to there, that could very efficiently and probably more cost effectively pick up your freight and move it. And so now what's happening, you're seeing these startups digitizing this whole workflow such that truckers can more efficiently find freight and shippers can more cheaply ship their freight. It's one example of an industry that's dominated. I think there's 18,000 brokers in the shipping industry. The average truck driving company has 1 truck. And so it's incredibly fragmented. And that's an example of a broker-driven industry that I think will be reinvented. And there are many others like that. Another way to think about it is any business process today that uses either a like notepad for something or a spreadsheet is an opportunity to build some SaaS tool, right? Some software as a service tool to facilitate. So most small businesses in America use actually very little software still today. Accounting and tax prep is probably the most common use case, point of sale from there. But there is so much more that we can do for all of these industries to just make them more efficient. It's not going to like radically change a distributor, right? You know, imagine you're a beer distributor. You've got your delivery men using a clipboard, writing down the prices of competing beers and marking where on the shelves they're placed on a sheet of paper. These sheets of paper then get sent to the main office where some number of people probably have to aggregate, input them into spreadsheets where, you know, 6 weeks, 8 weeks later, some manager, some marketing manager can look at them to understand whether they're pricing too high, too low, you know, whether somebody's running a special that they should compete in. It's just like random little things that we're doing so inefficiently now that I think, you know, certainly our children, but honestly, even sooner than that, right? 10 years from now, people will look back and be like, clipboards, that's crazy. And so I think we're just the start. There's certainly a lot of froth, but I think the optimism is justified. Smartphones and the penetration of the internet changes everything. You get to digitize everything, and in doing so, make it more efficient, make it more intelligent, and it's a good time to be building software companies.
So on that, one of the things I try to ask most of the guests is, you know, so far, I mean, this is episode 3, so everyone's been my network, which is largely entrepreneurs.
Mm-hmm.
But as the world's changing in this way, I'm curious, you know, you were in school as recently as 2007. If you feel that your education properly prepared you for the world that is existing and coming into being. And if you were, you know, running one of these schools or advising them or something, what changes do you think, if any, need to be made to how people are being educated and schooled, both the college level or high school level? You know, what do you have the skills? Are we teaching the next generation the skills they need to operate in this environment?
Yeah, so look, I'm certainly no strategy, so my reaction is it's ever more about specific skills. You know, if we think about Columbia, right? Degrees. And I think that is right. because when you think about the skills to be a professional, I think they're already changing quickly, and they're going to continue to change even more quickly in the future. So it's about the meta skills that I think a university like Columbia should continue to focus on. The ability to sort of reason critically and very sort of linearly, make an argument for or against something. It's surprising that at the end of the day, that is like that's the driver of us figuring everything out. Is sort of reasoning from first principles, building up sort of a hypothesis, and running an experiment. It's the scientific method. And so, the more practice at that, the better. I think, again, sort of comprehension of like words and the sort of the ability to sort of craft a compelling written argument, also ever more important. I think the challenge is that we have to, I think new grads ever more will have careers that span different industries, different professions, and so there's not like one thing that's going to make them successful. I think it's a desire to keep learning, an ability to pick up new skills, an ability to sort of think critically and communicate effectively. It's like these meta things that become ever more important in a world that is shifting as fast as it is now.
And so on that, I totally agree. I think learning how to learn, arguing, analyzing data, having a bunch of smart people who disagree, and like not just simply listening to authority figures. I think that's, I'm totally there with you. One thing I would say is that I do think that having maybe some deeper understanding of technology, and some training about, like the internet, it pervades our lives. But I don't think most people know how it works. And I think as it becomes more and more central, as we rely on it more, and there's flaws in how it works. I personally, I think that we need to understand that it's becoming the foundation of society. And I have a little one.
I think there's certain. I think that it's becoming the foundation of our society is a fact. But the great thing about technology is that it's built up in layers, right? Like most engineers at Thumbtack, who I think are amazing, probably don't know the intricacies of TCP, like IP protocols, right? The foundation of the internet. It's because they don't have to, because we've built up abstractions on top of that let us focus on a different layer of the technology stack. And that sort of like accumulation of abstractions continues to happen. And ever more, we're empowering people to leverage technology without actually having to know how the hell it works. It's not that different than I think the material world. Like I couldn't make a pencil, let alone a toaster. And that's great. I know how to use a pencil, and I know how to use a toaster, and they get me what I want. Ditto with the internet. Like, I understand our layer of the stack and can think about sort of web services and things like that. But when it comes to sort of the network layer, or the sort of compiler layer below that, or the sort of base metal that sits below that, like it's not something that not only I don't need to know, it may actually be a hindrance to sort of think about it. There's some companies like a Google or a Facebook that require such efficiencies and are at such scale that you have to sort of have expertise at all layers of the stack. But think about something like AWS, right? Amazon Web Services. It's abstracted the need for us to worry about physical computers. We're able to rent virtual computers of whatever sort of type that we need to make our website and all the associated services run. That's awesome. It saves us a ton of time, and it's something that I'm sure entrepreneurs 10, 15 years ago would have killed for, such that they didn't have to buy Sun hardware and Cisco routers and spend a bunch of time wiring all that stuff up.
Sure. So the thing that I would argue on, so all those enabling layers, yes. What I think though is that increasingly software is going to be making decisions for us and for the state. And that software is written by humans. And, you know, our cars are going to be driving us, you know, and I like on the self-driving car thing, you know, a car is a weapon, you know, I mean, you know, I used to be a paramedic, you know, like it's a couple tons of steel that, you know, you can hurl around at high speed.
Mm-hmm.
That the idea of agency of responsibility as decisions get made by software, and that software is owned by corporations, that software is made by people and sort of owned by corporations, that like at worst maybe get a fine, you know.
Mm-hmm.
like if I get drunk and run over somebody, you know, with my car, and that person dies, there's a good chance I will go to jail for manslaughter.
Mm-hmm.
If, however, I work for Google, I get drunk and I write some bad code that then, you know, but then gets filtered through various layers of bureaucracy that results in a car running over somebody and dying. That person's, I'd be shocked if, frankly, anything happens to any, you know, like maybe there's a lawsuit, maybe, you know, probably just chalked up to a freak accident because people just don't understand how this stuff works.
Yeah, I mean, I think lots of things are going to have to change, right? Torts, certainly among them. You know, who's responsible, in what case, right? Like insurance will have to be figured out. I think that's all true. I don't know if a knowledge of the technology, right, the specific machine learning models that Google is using to help its self-driving car predict sort of collisions is necessary to help adjudicate. At the end of the day, it's about fairness and right and wrong, and the software complicates things because it kind of, you know, creates this other, you know, agent that is involved in these decisions. But as you said, it was created by humans and sort of put in place by somebody who took the responsibility of making it work the way it's supposed to, and that's something that we'll have to solve for. But you know, I think the beautiful thing about technology is you don't have to know how it works. Now, to build it, you do, but the vast majority of people aren't involved in building technology, and that's totally fine. So we'll see. I think it's going to get weird.
So okay, so and this is the last topic I wanted to touch on. So I saw this chart on NPR a couple weeks ago, and it was a chart of like the amount of money spent in the economy on different sectors, and services had peaked in like basically the Gilded Age in like the 1890s, 1896, maybe early 20th century, like 1910s. Then throughout the 20th century came down, 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 down. And then by the 1970s, 80s, then started picking up. And now is back on the upswing, which for your business is good. You know, like that's what you're in the business of doing.
Yeah.
The thing I think a lot of people worry about, the thing I worry about, you know, I'm in the technology industry. Does the future look like the Gilded Age? You know, is this the Gilded Age? In the future, will there be just the people who make technology? You know, where are the jobs? Like, will it just be the people who make technology and who make software, and then the people who sell them services? You know, is that the Victorian, you know, the neo-Victorian future? Is that what we're heading towards? How do you think about that? What's your answer to that question?
Yeah, so I don't. It's complicated, obviously. I think this dystopian narrative that has arisen, that sort of the end of jobs is upon us. is wrong. And I think the reason is pretty simple, that technology is not simply a substitute for human labor. It's actually much more often a complement. And it will certainly shift the things that we spend our time doing and the jobs that we have. But the thought that humanity's greatest resources, which is human capital, you look at a sort of percent of where our wealth is, the primary source of our wealth is human capital. That technology won't primarily help enable new and better uses of it, I find to be short-sighted. I think it's extremely unlikely, and just like economically backwards, that we wouldn't leverage our biggest asset with the technology that we build. Now, I think there's a separate question of how the sort of spoils of this change get distributed. And I think there will be bigger fortunes created than maybe ever before, because there are unique points of leverage created by these technology platforms. Look at Bill Gates. Still one of the on the planet, despite the fact that he's been selling his Microsoft stock for a long time. Turns out he's been a good investor too. The reason is because he started a monopoly business, and technologies, when you're tend to be or can be hyper efficient, hyper scalable monopoly businesses. This wasn't a Rockefeller that had to build sort of oil pipelines and refineries and dig wells. They created software that they sold at 90% gross margins that became a fundamental layer of the stack, and through that created one of the biggest sort of piles of money that Earth has ever seen. Look, that's going to keep happening. But I would argue that the benefits, by and large, still accrue to customers. So, you look at a Gates or the Google guys, who have gotten insanely wealthy. But on net, I would argue that the world has reaped more of the benefits of Google than Larry or Sergey. It's simply because these are broad-based platforms, right? Google has 1 billion monthly users, something like a little bit more. Every month, they have access to the whole internet, the entire global wealth of knowledge, through a tool that sort of miraculously gets them what they want quickly and effortlessly. Like, that is insane and so powerful and creates so much value for the planet. It's true that these two guys also made fortunes off it, but on net, I think that's a fine trade-off.
Well, but so now one of the things I like about Thumbtack is that you're actually sending work to people. But if everyone has access to this information, then it's not special. And generally speaking, to get paid to do something, you need to be special. Now, it might be like you just might be in the right place at the right time. Like, I need to dig a trench in my front yard and you're there. And so, because in the offline world, like, you can't be two places at once, obviously. But in the online world, you kind of can be. And so if someone has a smartphone, someone's starving in Ethiopia or something, and they have a smartphone, with Google on it, I mean, yes, they are richer than they would be without a smartphone with Google, but not necessarily hungrier. They probably don't have access. They can't like just sprig, on their phone. Although who knows?
Yeah. So I think we are in a unique position that as a marketplace, we enable commerce. And so we very directly create value for our businesses by helping them find customers and make money. I think something like a Google isn't as direct. It's not creating a monetary value for people, but I do think it's still value, right? A fisherman who previously didn't have access to sort of weather patterns or what market rates for different fish were, now does, and they can be much smarter about it. They can learn. The guy who just won the World Track and Field Championships for the javelin is a Kenyan man who learned how to throw the javelin, he says, from YouTube videos. Like, now that's non-monetary, but the internet enabled this guy, who's clearly an incredible athlete, to realize his potential, and be the world's greatest. I think it's awesome. I think that's like an extreme example, but I think there's sort of micro or nano examples of that, all day, every day.
Well, so here's what I would argue, and I love that we're having this discussion. Or here's what I'd push back. That yes, there are, that's an extreme example. But in many ways, frankly, so are you, right? Like, I mean, you're the extreme example of some couple, you and your co-founders, a couple dudes who had an idea, plugged really hard, built some software, and now you're this, this online broker for all these, for $1 billion worth of commerce and growing. And you guys, have been showered with capital as a breakout success. And that's awesome for you. And like, I hope you're, I hope you become another, another Gates. I seem like you're on the trajectory, let's say. And same with the Kenyan guy, right? Like there's these outliers, and I feel like the internet and the economy, it does, if you can figure out this if you have a superpower, you'll get massive amounts of leverage. And so I guess, that's the thing that I just come back to is it seems like, and this is not just me, this whole idea of the wealth gap and wealth disparity and income inequality, that there's these extremes of inequality that's happening. And I don't know, like, I mean, where I live, I live in Menlo Park. I am in Menlo Park right now. And I feel like to be able to afford a house that would otherwise in any other place in the world would be like a pretty good middle class, maybe upper middle class house, I have to like sell a company and like get rich. Like I need millions of dollars, to be able to do that. And as much as like, hey, I'm in the game, this is what I'm trying to do. I know what I signed up for. It feels scary because I know I don't think I'm normal, and I don't think that, like, as much as I want to, I don't think everyone can do this. I don't think everyone can be, you, or be like you. And yeah, I don't know. It makes me nervous.
Yeah, no, I think there's no question that our modern world has sort of creates outsized returns for the biggest winners, be it a movie star, a pop singer, an athlete, technologist. The audience has never been bigger, and so the people who, through luck or talent, manage to sort of hit it bigger than ever before. So I think that's real, and that's not going away, at least not from my perspective. The way I tend to orient my thinking is less around the question of inequality, which I think is important, but I think the first order of business is to just raise the bottom up. If all we could do between now and sort of 50 years from now is raise sort of the incomes or the quality of life of the bottom 20%, and even if inequality actually got worse, but we actually got the bottom to be way materially better off, I think that would be a huge win. And I think technology is doing that. I think in its ability to spread knowledge and spread access to, physical things, the physical materials that we need in our daily lives have never been as cheap. The food has never been as cheap. Things like, getting carbon out of our sort of energy system that helps everybody. So I think there are a lot of positive trends, and my orientation is around focusing on what are we doing for the people who are the most in need, and are we making their lives better? And I think technology is in a huge way. Does it also have this effect of making the winners outsized as well? Yeah, definitely. I don't know how that continues to play out. I don't know if that's good or bad. If that's what it takes to make the broad base of the world better, my gut tells me that that's probably a good trade-off, or a worthwhile trade-off. There may be other ways that don't require it. I don't know. I'm not in a position to either know or affect it, but I think inequality is one part of the story, but I think the other part is simply like what's happening to the people who are most in need. And if they're getting better quickly, then I think things are good. And if they're not, then things are not good.
Marco, it's been fantastic talking with you. It's been
with you, Matt.
Yeah, man. Thank you so much. And everybody who's been listening with us, thank you so much. This has been episode 3 of Columbia Alumni Radio. I've been here with Marco Zappacosta, the founder and CEO of Thumbtack, and we had a really amazing discussion today. To learn more and to subscribe, just log on to columbiaradio.org, and you can hear past episodes and subscribe to get emailed when new episodes come out. Thank you so much, and thank you, Marco. Have a great day, everyone.